Hello guys, good morning. It's your favorite coach LarFX Academy once again, and today we are going to be looking at the Volatility 10 index. Now, the Volatility 10 index doesn't really necessarily need us to go to the other MT5 section. It's very straightforward and clear here because one, we understand that we have already had a break of trend line or a break of trend at this point, which we'll call our break of trend line. So price from this top point to this point, it gives us a break, and the only point it's going to give us another break is whenever price violates this between this point and this point. So whenever price breaks below this area, now we should be looking out for a continuational move to the downside. But before I expect a continuational move to the downside based on this break of trend line, I would appreciate price to break to this, get to this point, break out of this point before a continuation. But then we have a new buy structure, break of structure to the upside. Yeah, so break of structure to the upside. We have liquidity sitting at this area, and then from the swing low to the swing high. So this is basically what we could be looking out for at the moment. So we could be looking out for rallies from this point to this point, and price reacted from 0.618 level. So this is in support with our bias for a buy. You can see it also relating with our strategy, and everything is falling into place. Now we go to the 4 hours time frame. Now on the 4 hours time frame, one thing we can easily pick out is you can pick out this point from this point to this point, and you can clearly see that we had a break of trend line. So we had a break of trend line around this point, and we clearly saw that this high here is a significant point we want to see price take out for our buy bias, this high. So now aside that, we also are having a kind of very structure in this point, but the way price is getting to it, I kind of I expect price to break above it based on the break of trend line in the higher time frame. So next thing we can do is to go to the smaller time frame, and we tend to look for what has happened. Now, reading structure from the beginning, you always hear me, I talk about that a lot. So we see that we have a break of structure at this point. We also have liquidity sitting at this point on the smaller time frame. We've gotten the bigger bias. Now this is a smaller bias basically. Then we simply would mark from this particular swing low to the swing high, and we clearly see that price reacted from this particular point, splitting up for our stop loss to be at this price point. So that is what we got on this one. So if you had entered here, you would still be holding the trade to get into this area, but you can see all of the moves. So that's why I always say one thing. I always say I so much prefer taking what I will call, some persons will call it scalps and all of that. So I so much prefer analyzing the market and taking scalp trades. You understand? Taking scalp trades, picking it from zone to zone, picking my trades from zone to zone, and that way it helps me a lot. So now what are we seeing here? I'm simply picking my two. We mark out this spot. I'll mark out this break of structure here, and then we pick our Fibo. Remember, from this point now we are looking at taking profit at the overall high, but now we'll mark our Fibo. Our Fibo tells us that okay, from this particular high we could look out for price to do something. We could look out for price to retest into this area. It gave us a support level from this point and then rally into this point. That is very wonderful profit by the market. And one thing we can easily see or do from this particular one is we can clearly pick our 2 here and then wrap it up to this point. So this is what the trade looks like. Putting stop loss here. But then the point here is I am not going to be looking at keeping this indicator too, because we still had entries at this area. So I'll simply just mark where we got our entry, and with your idea you know where to look at take profit at. So I'll simply just mark this point. So this was the point we got our entry, and this was the point we got to take profit from. So now after that happened, this became our new level because structure got broken to the upside. This became our new level, and even before this take profit got hit, if you mark it with this high, you see that price got into the 0.79 level, the same area. It got back to it, tested it, and picked its move again before hitting take profit. So that being the case, we have another level again, because I always tell people I like to see the full confirmation before I take a trade, which is 1, to see a break of structure, then 2, to see a liquidity grab. So when I see these two things, my confidence level is very high on the trade. So go full margin, baba. So guys, we look at picking it from this point to this area. So I look at picking it from this point to this area, and this is where I anticipate full take profit. So now, if you look at it, it didn't get to the 0.79 level. It was expected is 0.618, and this is what we got. And from that point, it rallied to the upside, hitting take profit. That was just cool. Okay, so I'll pick that to, we drag it across, and we get something of this nature. Yeah, so after price got to do this, it gave a rally from this point to this point. Now we would anticipate that price also still does that, give us that kind of a reaction, market reaction. But then from what I'm seeing, I would simply say if price is to give us a reaction, we need to slash through these highs. But then if it does slash through these highs, then it must really move for the overall take profit. So that means it's not coming back to that low. But if it does, then we would still be there waiting for it. So that being the case, we would simply say, okay. I hope you guys are following what I'm analyzing, because it's just using the same concept and we're picking entries. So one thing again we could do is to mark from this swing low to this swing high, because we've gotten a break of structure, a little liquidity grab, and all of that, everything. So we have it there, and we simply mark from this zone to this area. So if we do that, okay, very good. You can see we tested the flip zone, 0.618 level, and then also we tested the flip zone, and also tested the 0.618 level. So That being the case, this is our entry. So with this, we have no doubts any longer that price is going to rally to this upside. So what are we going to be looking out for? At this point, I looked into the structure on the smaller time frame, and that gave me an entry from this point to this point. So I traded this whole zone, but I didn't trade this. I didn't catch this earlier yesterday. So we would simply go to the 15 minutes time frame and let's pick an entry. So on the 15 minutes time frame, what do we have? Clearly have this area as our level for final take profit, and we have this area. So what did we do? We simply mark from this swing low to the swing high. The first swing high was this. Price reacted to the 0.618 level very clearly and rallied to the upside. And then we have liquidity grab there. So this was what messed me up. So we had liquidity grab here, and I took entries from around here, but got into this point. I was in decent profit, but then price retraced all the way into this point. I was holding it. I was massively on them. I would say I was just on some lot sizes, which weren't really just the best on a student account though, and we just incurred some drawdown. You get, but then price still rallied to the upside, and it made another retracement. I didn't catch this, and then rallied again to the upside. So now I hope to catch the next one if it does drop down again today. So now this simply tells us that the push to the downside was really from this low, so it took it out at this point. You see, it came here, tested this point severally, and then rallied to the upside. So we have this point clearly that price has reacted to it, and then after that, the next thing I'm doing is picking my Fibonacci from this point, which is a low that has been cleared before, to this new high. And then we can see price reacted from the 0.618 level clearly. So you can see price reacted to the 0.618 level clearly. So now what are we looking out for? We're looking out for our opportunity for today. So our opportunity for today, let me go to the 5 minutes time frame. Maybe I'll be able to see things clearly at that point. Now our opportunity for today is, we have a liquidity grab here. We have a break of structure here also. This was a break of structure, and this also was a break of structure. Which is the best? The both of them are break of structures. So I prefer to use this major one, but then the one that took liquidity is the main break of structure. It's just the second wave, and we also have another liquidity grab here. But then, as market always does, it will respect the both of them. And if we look at it, the both of the areas would almost tally. This break of structure from this swing low to swing high would also tally with this area here. Let's look at it. So we have price giving us this. So we can see that the whole reaction is supposed to come from, you see, it's just going to come from this area here, because I'll look at it tapping 0.618 level. So I'll expect it to come from this area. I'll expect the reaction to come from this area. So that simply means a drop from there to this point. Then we can maybe consider a buy from this point. So that's what we see. Then let's take it down to this point and see what it still does. So if we do that, it simply tells us that we should expect price to even tank a little bit below to this side. So we have these two areas, and I'll simply say let's see what price will do. From what it has done before, it came down very well and even tapped on the low here, so it could still repeat that, coming to tap from this low here, Yeah, so coming to tap from this low. So guys, let's keep our eyes crossed and let's see how the market will react. I really would advise anyone that's getting on this trade to pick his trade from the 0.79 level. I mean 0.6, 0.79 level, which is this point. So this level, which we have as the yellow section, is the best place for you to take your entry. This is where I would look at price just getting to tap out. So what do we have to look out for on this market? Here as an entry, and then here as a point that would get taken out. So this is what I am expecting. So this is what I'm expecting with my stop loss at the bottom. So I'll be expecting, actually I would like to take my trade here. This is what I would like to see in the market. I would like to take my trade from that point and then put my stops at this low. Let's say little pips below that point, and then this is how I like to set my trap, because the reason for this is because price has reacted in that way before now. So that's just all I have as my reason. Do have a wonderful day, guys. Peace, one love.